Dear friends, today we're going to analyze what CBDC and ISO 20022 are, and what role Ripple XRP and Stellar Lumens will play in the future of the whole world. You're on the Make Money channel. Let's sort it all out. CBDC stands for Central Bank Digital Currency. It is essentially a new form of publicly available electronic currency issued by the central bank. It is available in various forms, including retail or wholesale and account-based or token-based trading, and it contains a digital ledger that can use such technology as blockchain. In simple terms, it is the counterpart of conventional currency, which is used in the state as fiat money and serves as a legal method of payment, but in electronic form, and stored in an electronic wallet. An electronic wallet for digital currency doesn't differ from a regular mobile bank app and Apple Pay or Google Pay technologies. Therefore, nothing will change for a person in terms of currency usage. It will be possible to make payments, transfers, check balance, and invest in government securities with a few clicks or a scan of the finger through the e-wallet. Also, with the proper implementation of CBDC, it will no longer be needed to collect documents to prove the source of funds, which will simplify the work of many people. The popularity of CBDC is growing worldwide for many reasons. The COVID-19 crisis has caused a shift in payment habits toward digital, contactless payments, and e-commerce because of the latter denied risk that banknotes are a way to transmit infection. Cryptocurrencies developed by private organizations or informal communities, for example Bitcoin, have experienced significant development and increased value. In response, 87 countries representing more than 90% of the global GDP are now studying the impact of central bank digital currencies. In China, for example, the digital yuan has more than 260 million users and more than $13 billion in transactions. By 2024, it is expected that at least half of the world's population will use digital wallets for transactions, which is more than $9 trillion annually. CBDC will also facilitate more efficient, cheaper, and cross-border payments 24/7, 365 in the financial services industry. And as we know, the more people use digital wallets, the higher the value of crypto will be in the future, as people will not only store their savings in digital dollars, but also in tokens. So if you believe these facts, a bull market is not far off. Financial monitoring. CBDC enables financial control at all levels: incoming, outgoing payments, payments between key elements within the state, no matter if they are government officials, security officials, countries, businessmen, servicemen, volunteers, or ordinary citizens. Out of 10,000 transactions, it is important for the government to see 2-3 anomalous ones and be able to calculate them. Accordingly, the use of CBDC in time of war will give more transparency to overburdened internal security systems, financial monitoring, tax authorities to find financial transactions made by terrorists, bandits, or drug traffickers. But they can just as easily find you if they don't like something, which is very alarming. States fight collaborators, terrorists, and other representatives of criminal circles who receive funds from others like themselves and pose a threat to the state. Therefore, it is important to understand who the funds come from, where they come from, in what amounts, and how they circulate within the country. CBDCs allow you to increase control over monetary and fiscal policy. A change of the interest rate of the distribution of financial aid through fiscal payments, as during COVID-19, can be instant. If cash is not available, CBDC can also provide a delivery mechanism for negative interest rates. Digital currencies can match the zero, the bottom line of traditional monetary policy, using cash payments for spending paid to CBDC. CBDC will also allow governments to get instant feedback on the impact of changes in real time and make adjustments. 24/7 access to financial payments. Cash is more financially inclusive than a digital bank account, and not everyone has the financial literacy, funds, or paperwork needed to open it. Commercial bank branches may be far away, and services may have limited hours of operation, whereas retail CBDCs offer 24/7 payments anywhere, including mobile devices, smart cards, and programs. Digital currency payments can be much faster than outdated payment systems. CBDC can process more than 50,000 transactions per second for stable fees within fractions of a cent. And for example, the average Visa is about 5,000 transactions per second. Do you feel the difference? CBDC is cheaper than using credit cards such as Visa or MasterCard, and at the same time, it reduces the possibility of errors, crimes, and checks due to the secure recording of transactions. Working with one fixed and distributed ledger is more efficient than multiple variable ledgers. An open market model for transaction processing can unlock competition by encouraging lower prices and innovation. Blockchain can verify and execute transactions even offline or where a user has an unreliable connection, which is relevant today in some countries. Improved cross-border payments. Cross-border payments face four main problems: high cost, low speed, limited access, and lack of transparency. For example, on average, it costs about $14 to make a $200 payment. Turnaround time is 3 to 5 days. Problems arise due to complex processing of compliance checks, limited uptime, outdated technology platforms, long transaction chains, high funding costs, and little competition. Cross-border payments within a currency union tend to face fewer difficulties and inconsistencies. Cross-border CBDCs can help reduce dependence on intermediaries and hence reduce transaction costs and time. 54% of central banks expect CBDCs to significantly reduce the cost of cross-border transactions, and another 31% expect tangible cost savings. These savings can yield significant benefits, especially for economies heavily dependent on remittances. According to the national banks, private remittances account for more than 7% of the GDP, and according to the International Organization for Migration, all of 11% of GDP, which is very significant. In order for CBDC to be an effective catalyst for cross-border payments, international cooperation is needed to coordinate and incorporate cross-border functions at an early stage. The central banks of China and the United Arab Emirates are exploring such a concept with a multiple CBDC bridge project. The Dunbar project between the central banks of Singapore, Australia, Malaysia, and South Africa is another prototype for cross-border payments. For citizens, instant micropayments provided by registry technology can improve the sending and receiving of remittances, reducing dependence on transfer services such as Western Union and others. Combating corruption. Take Ukraine as an example. Last year, US Secretary of State Antony Blinken said that Ukraine was losing $40 billion, which is about 30% of its GDP, because of corruption. And this is one of the most important open problems in Ukraine. CBDC technology can significantly improve transparency and anti-money laundering, and can support anti-corruption campaigns by governments and the IMF. The currency information and supervision component of the CBDC platform is particularly useful, since it allows central banks to monitor currency transactions and integrate with anti-money laundering systems. This component provides both CBDC supervisory functions and information functions. Supervisory functions manage workflows related to CBDC issuance and distribution and surveillance of distributed security equipment. The information functions collect real-time statistics on currency movements, rates, wallets, transactions, etc. They allow you to access macroeconomic statistics as well as individual transactions or wallets. And I know what you immediately thought about. Yes, this is where total government control of the population is born. But how is it possible to find corruption among officials with the help of CBDC? It's very simple here. When implementing CBDC, every official must create a wallet for digital currency, which he will use to receive his salary and declare other official receipts. He is not allowed to spend the money in any other way than the CBDC wallet. If an official receives funds in cash, he or she must go to the bank, declare them, and put them in the CBDC wallet. Thus, all monthly expenses of officials become transparent to the state and can be easily monitored for misuse and corruption. Also, it is possible to fight corruption with CBDC at the level of B2B payments. For example, procurement for hospitals. There are payments within the hospital, payments between the hospital and the supplier, purchases of raw materials, etc. CBDC allows you to track anomalous chains of communication for each individual hospital and show them to the country's tax and security officers. When implementing CBDC, all financial flows among B2B, B2C, and C2C become transparent to the government. For example, the government decides to make a drug to treat COVID-19. The raw materials are purchased through CBDC. Then, after the manufacturing process through CBDC, the drug is sold to a distributor, and from the distributor to a reseller. Then the reseller places the drug in pharmacies, and the citizen of the country buys the drug in a pharmacy. All of these chains of transactions from the beginning of the purchase of raw materials to the purchase of the product in the pharmacy by the end user are seen and controlled by the government. If there are any strange corrupt schemes in this chain of transactions, the government will intervene and find out to the penny where and why there were extra transactions, or why the right amount was not paid. So one of the most important things that the launch of CBDC affects is anti-money laundering and cybersecurity, the ability of the state to adjust to changing external and internal conditions and fully control the state's financial market. Taxation control. CBDC can make taxation easier, safer, and more reliable for the government. Key features include real-time taxation, automated auditing, and automated integration with government and private registries. Instead of placing accounting burdens on individuals and companies, governments can receive taxes automatically and in real time. Investment attractiveness. CBDC creates economic transparency and solves many of the risks that internal investors pay attention to when investing in the country or assessing risks. The inflow of investment into the country is an important point to support the economy. It's also a way to take a big step forward in the digital development of the country. So what do we have? We see the outdated system of finance in the form of banking system, where everything takes a long time and the bank takes a good interest for each action. With the help of CBDC, we can do the same thing but cheaper, faster, and much easier. Banks have a database of their customers which is easily leaked in CIS countries. The CIS countries and Europe has such a practice. I think it is unlikely that CBDC will help solve this problem. The most important thing is that CBDC can really help a country where corruption is rampant. But would you like all your transactions to be transparent? To feel like you're not in a tinted car or fishbowl, where anyone can check your transactions through special devices? Personally, I wouldn't like that. Write what you think about in the comments. I'm interested to know your opinion. People who have been using exchanges or electronic wallets for a long time may say it used to be better. I do agree with you. Before the government took interest in crypto, we had not needed to confirm our identity with a passport or other documents. In fact, your transactions and your capital were incognito. Now, at almost every exchange, in order to be able to transfer not small amounts of money per day, you need a verification with a document which confirms your identity. In fact, at this point, you are no longer invisible to the state and its various structures. So far, cold wallets and grey exchangers are saving. But is it going to last? Do you think that in 5–10 years the state will completely control us or not? But I would like to emphasize that with CBDC, you can fight corruption and different criminal groups. But I would not like to be completely transparent, because in any system there will be a person who wants to take away your money in a legal way. What about ISO 20022? It's much simpler here. ISO 20022 is a global standard for the exchange of electronic messages between financial institutions through the Society for Worldwide Interbank Financial Telecommunication (SWIFT). As of May 2022, more than 70 countries use the standard. The standard defines approaches to the construction of business models, the rules of business process description, design order of schemes and message formats, as well as it regulates the publication of documentation under the standard and the basic rules of its maintenance. In general, the so-called standardization standard. Also, you should know that digital assets compliant with ISO 20022 can become a standard for regulatory compliance because they can work with CBDC. The next fact is that XRP from Ripple and XLM from Stellar Lumens are the only tokens that are suitable for CBDC creation. Ever since cryptocurrency became mainstream, regulators have been trying to figure out which digital asset is more likely to fit their view of interoperability, which is in its own words the transparency and openness of a system that can interact with the other products or systems without any access restrictions. Consequently, they're trying to incorporate ISO 20022 crypto assets because they are suitable for development by the CBDC regulators. ISO 20022 is intended to change the way banks to communicate and increase interoperability. In addition, integrating key crypto assets such as Bitcoin and Ethereum into the SWIFT ecosystem and assigning them an ISO number will radically change the interaction between digital assets and fiat currency. In addition, the European Union is moving to ISO 20022 this month to simplify high-volume cross-border transactions. This will be linked to the Target 2 system, a financial settlement platform adopted by all central banks within the EU bloc. Nevertheless, the US Federal Reserve plans a transition to ISO 20022 system in November 2023. experts believe that ISO-compliant cryptocurrency will change the landscape of digital assets, and regulators will loosen their strict stance on ISO 20022 assets. They believe the move will facilitate widespread adoption of the standard. Ripple XRP and Stellar Lumens XLM are the two verifiable digital assets compatible with ISO 20022. The others that may be compatible include Algorand's Algo, Hedorella Hashgraph HBAR, IOTA, Quant's QNT, Cardano ADA, and Xinfin XDC. Most importantly, XRP and XLM comply with ISO 20022. Ripple's own token XRP is one of the largest assets compliant with ISO 20022. With the top rating in the ISO standards body, Ripple plays an important role in the development and implementation of ISO 20022. Unlike other traditional cryptocurrencies such as Bitcoin, Ripple's ODL technology is designed to be used as a digital payment system and platform for quick payments between banks and other financial institutions. In addition to being used as collateral for payments, XRP is used for currency conversion and cross-border transactions. In addition to being suitable for CBDC development, the XLM token can also be used as a payment tool for fiat currency conversions. More than 300 banks and financial service providers in 45 countries use XLM for payments. Canadian Imperial Bank of Commerce and Santander are two banks that use the tokens for this purpose, as well as others in Brazil, Singapore, and India. So it's too early for holders of these coins to get upset. There is a possibility of growth of these coins in the future, with the development of ISO 20022 in larger countries. Despite the fact that ISO 20022 was intended as a replacement for SWIFT, it will further strengthen the Ripple ecosystem by increasing synchronization between XRP and SWIFT. As CBDC becomes the preferred option for regulators, any crypto asset that complies with the ISO 20022 is likely to become the benchmark for others. I want to add that coins like Bitcoin and Ethereum will have a hard time meeting ISO 20022 standards. And hence the question arises of what will happen to Bitcoin and Ether in the future. One possibility sounds like this. If XRP ends all its litigation and finally becomes a pure coin, it has a great future due to its technology as XLM. The coins will act as today's dollars and euros in the digital marketplace to exchange or pay for anything. And Bitcoin and Ether could become today's gold and silver, a function of investing, saving or multiplying one's capital in the long run. What do you think about it? Does XRP have a chance of reaching the next level and replacing everyone's favorite currencies? Will Bitcoin be less popular than other coins that have already begun to benefit the global community? I will be glad to see your opinions in the comments and participate in your discussions. That's the end of it, my friends. Thanks for watching. Don't forget that we also have our Telegram channel, which is in the description below the video. Also, don't forget to subscribe to the channel and of course like this video. Make money.